And I was also asked on give you just a general overview what's going on that, and some of you might know that I don't like these numbers, to be honest. Research is sometimes a little bit boring, but if we start with some well-known, some not so well-known impacts on the market. Sorry, I want to start with a general overview on that. And I think in these days you were also all the time asked on Thomas, what is the risk? So risk, yeah, risk. It's all in our life. So at the short-term risk, we know what's happened going on, and we see that a lot of people from when they were younger, they still believe in punks not dead, Richard, right? So I don't know if these gentlemen from the Clash really think about what happened 25 years later. But and this is of course propaganda. What you see here, this is not my personal expectation on Mr. Trump. I'm not sure if this is really long-term risk, Mr. Trump, because all the sentiments, and there are so a lot of sentiments, and the best thing for an analyst and for you and me is avoid all these red banners on NTV and all these CNN, and avoid this. Don't read today the Handelsblatt, 70 pages Brexit, yeah. Oh, it's just a yes or no. It's quite a simple thing. So you have your establish and you have your design your view on that. I have my own view on that. Beside all the sentiments and talking to my relatives in Boston on Sunday, they get a little bit nervous, to be honest, because they are all these Democrats. And Democrats means they are like in Germany, the CDU or CSU, you know, this is Democrat. And but they are a little bit cautious because they face the situation that this man is so stupid. That's the attitude. On the other hand, what's really important, maybe from a German perspective, he made his billions for himself. And this is what the US people like. He's not a kind of inheritage guy. He makes his billions for itself. He's an entrepreneur. And this is cool from a US perspective. On the other hand, think about the situation. What about the nuclear code in the hands of Mr. Trump? Yeah? This is propaganda. There was always within a regime situations where I can take these things. But again, on the long-term risk, I think we will see no dramatic change on Friday morning. This is my personal view of the whole thing. Talking to people in the Midlands, in the Cotswolds, but also in the City of London, which, to be honest, my colleagues in the City of London makes me much more nervous, because they are nervous, meanwhile, because they are sitting in London. And maybe half of them will face a new challenge when something happened called Brexit, whatever this means, by the way. From a Frankfurt perspective, I like the Brexit, but just from a Frankfurt perspective, and this is not my personal view. Anyway, I think all these long-term and risk-term bring us to one general thing, seriously speaking now. I think when you look in all the Q1 figures and also by mid of May, early June this year, we see that nearly in all of the European cities, countries, investment centers, there is a huge drop in the transaction activities. -40, -20, -60, -80, minus. How does this fit in our general expectation on, well, the markets are booming, Thomas? Meanwhile, I get a lot of invitations by people try to say, Thomas, let's have lunch and let's talk about real estate. I say, yeah, well, but these are not real estate people. These are people from the fixed income equity side. It's my colleagues from the hedge fund and say, Thomas, look, yeah, it's a challenging time. Bond side, there is a big zero by Mr. Draghi. I have to make plus. And the only asset class who make kind of a plus, it's, well, of course, simple, real estate. I try to avoid to say, look, we start at 5, now we are at 1.9. Let's keep it simple and short this way. From their perspective, it's from 0 to 9.5 or 2 or whatever. This is a phenomenon. This is heaven. So again, my main concern are not the situation of long-term, short-term risk. At these days, we can really make it absolutely measurable that a lot of things are really postponed by Friday or Saturday morning or whatever. So I'm absolutely optimistic from a European perspective on the transaction activities and on the volumes. And so again, all these things like the bubble discussions, I don't want to bring this on a general headline, but I don't think that this is really a measurable case in these days, beside all the sentiments, by the way. So just a slide on the consumer side. I see that there in your and my life, it's not really easy to get something what is called a yield in former times on the German Sparkassenbuch, 4,75%. The question, and this is again, keep it really short and simple before the discussion starts. The philosophy of Mr. Draghi is by the QE, whatever it takes, is that I want to print money and buy these things back by March 2017. And this is not too simple. There is a huge model behind that, but keep it simple. Mr. Draghi brings us as consumers institutional or private, in a situation that we have to invest, which means buy a car, a flat screen, or holidays, or whatever. So this is the rationality behind these things. By the way, the consumer index and all these things are really absolutely fantastic. Digging deeper, if we look especially in Germany on the 1.8 expectation on the GDP forecast this year and 1.9 next year, we have to face that around about 50% of all the GDP growth is based on consumer. And this is not healthy, personal view by a poor analyst. So again, all these export things, starting from machines or pencil or pistols or whatever what we are doing, supporting these things, this is just half of the GDP growth. So the rest, it's you and me. By buying a fourth flat screen or a fourth iPhone or, I don't know, 10 weeks of holiday, I don't know. Again, this is the pain we face on that. From a private perspective, maybe it's okay if you buy a second car or a third car or whatever. But from a structural effect on the economy, it's not healthy, in my understanding. So as a poor little analyst, I would say, Mr. Draghi, and I see him every day in his skyscraper, opposite from my little skyscraper, Frankfurt, I say, Mr. Draghi, please stop these printing money. But again, he never heard me, and it sounds maybe so reasonable what he said. But again, all these sentiments will be absolutely fantastic. But I mentioned and I told the story just for you looking behind the scene, what is the pain of that by buying something? Let's focus now on the real estate side. And what I really try to show you here is this is my daily job. Follow rumors. There is obviously a 1.1 billion resi portfolio in the market, and we see the closing, the signing within the next 3 weeks. Ooh, yes, maybe. It's good. It's perfect. And you see our forecasts. You see the blue bar charts. We are still optimistic that we see by end of the year a range of round about something 300 billion real estate investments within whole Europe. By the way, just direct investments. And you see where it starts with the circle, ends up with the kind of egg or whatever. It's the so-called available money for real estate investments. This is the internal prediction by asking all the so-called business development and fund managers, how much money do you collect right now and do you expect to collect? So it's just an estimation. Going back to I wouldn't say good old days, but in former times, it was starting point in 2007, there was a fantastic investment activity, 226 billion versus 250 billion. So it fits nearly, it's equal. Then it starts going on, year 2013. You see that obviously the money, the collected or asked money, the announced money, rises dramatically. Well, rises a little bit, but just by comparing 7 and 13. And on the investment side, going back 2013 compared to today, it was worse. It was much more better than 2010, but it was worse. And now you know that you're following the evolution. You are part of the evolution. And this is again where I mentioned, I wouldn't say it's healthy or unhealthy. This is the status quo, that we estimate that around 700 billion euros were collected or already collected or announced within Europe, within the 3 asset class, asking for real estate. It wouldn't come to an equal situation, but just give you an impression of what's changed between 2007 and 2016-17 on that. Again, we're absolutely optimistic. And I don't follow the situation, Thomas, the market is drying out because there are not interesting portfolios or properties available and the prices rise. Yeah, no, I don't think so. There is a lot of room for improvement. Positively speaking, very positively, following all these transactions and the lists you will see maybe later on, I don't see these, let's say, strange portfolios. They are speaking in average, more general, they are risk adjusted, they are conservative, they are core, whatever this means, but they are not Hamburg versus Bratislava and a little bit Moscow, you know what I mean by that. So it's stable, just simple, it's stable. The prices get higher, again, and this is the job for you and me, myself maybe, and also the risk managers. And this is again where I see a lot of improvement by covering, let's say, Hamburg with a little Lüneburg and a Fachmarktzentrum somewhere in the southern part of Bavaria. Sounds stable, is a little bit different. The explanation headlines will be simple. Thomas, we use this due to diversification reasons. Yes, but it's healthy. So again, I'm not a contributor of all these, it's the end of the world, but face please the number of monies. Negatively speaking, a lot of distribution managers will lose their jobs maybe by next year when the acquisition managers don't grab the properties, by the way. Again, we will see a lot of interesting stories, why we do core to manage and manage to a core and core, all these asset, blah, 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 these things going on. Boring part, just to show this, and again, I don't want to dig too deep in the numbers, but what's the most important thing for you by your expertise, but also by your feeling or gut sentiment, is that if you compare Q1 2015 to Q1 2017, you see these as, well, I call it big fat minus. Forget all the headlines. The markets are booming on one hand, but if you really make kind of a sum on that, we see that just by comparing the Q1 figures, this one versus that one versus that one, we see that obviously the first quarter of this year is not so healthy or good or whatever compared to the year before. There are a lot of room for discussions on that, and I don't want to explain why Czech, obviously, or Finland. We know what Finland going on. The portfolio is going there, 135. This is just kind of a nutshell. For me, the most important thing are two things. One is the ranking. It's still in line, which is UK, which is Germany, which is France. By the way, France make really huge drop on that. Then it's Sweden and the Netherlands. So the traditional ranking by who are the big stakes and the big pieces of the cake of investment, it don't change dramatically on that. From a minor part of that, for sure, some goes up, some goes down. But there is still a huge dominance by the UK / London, Germany, followed by France. And again, France, you know that especially the economy, and maybe with Monsieur Hollande himself struggle with the situation. And I think this is also part of the discussion later on. Want to follow? It's nearly the same picture wherever you go now within Europe, whether it's UK, with Germany, France, and the Nordics. The Nordics, it's Finland, it's Sweden, it's Norway, and it's Denmark. So it's not Scandinavia, it's Scandinavia plus Finland, so we call it the Nordics on that. And you see it's nearly all the same evolution. The yields drop or decline on that on a level which was, to be honest, 5 years ago, not really explainable what has happened. And again, try to keep it short and simple. There are a lot of more explanation on that, and this is the leverage of Mr. Draghi's philosophy to pump much more money in the market, and we and you have to face and to deal with how can we make these things risk adjusted on that. Volumes are down, but prices hold up, and this is obviously what some of you maybe a little make more concerns in the situation. Oh, Thomas, we tried to reach and scratch on the P compared to 2007. This is again looking back in the good or bad old history. You know that when the DAX touched the 10,000 basis points 2 years ago, red line, NTV, hooray, hooray! Oh my God, this is a stock bubble. Obviously, there is a new kind of level we have to face about that. So again, average yields, average office and retail just together. So again, really scratching the surface on this stage, capital flows. You see that there is also the kind of a traditional ranking still alive: UK, France, Germany, Switzerland, Sweden. Switzerland comes up a little bit just by a minus on that, and coming back to this postponement philosophy, and this is one of my main results on that. We see a lot of these investments not by stopping the due diligence, but they find reason to within the due diligence and the interim to postpone this by Friday or Saturday. What happened? It's quite simple. And again, I speak the optimistic scenario. I can imagine that by the first week of July, we see a lot of absolutely rocket-sized headlines. The market is back, the market's booming, so all these backdrop coming up on that. And this is again where, you know what's behind that. It's just a big postponement effect right now. The market's still healthy, the market is in line. The prices get a little bit higher, for sure. This is the market. This is you and my responsibility on one hand. On the other hand, I don't see any dramatic change in that. Well, by the way, if there is on Friday morning at 8 a.m. or on Thursday night, 11 p.m., if there is the red banners coming from BBC with another result, I expect, then obviously things change. I wouldn't say dramatically, but investors would be, of course, much more cautious, and then I can delete my forecast for end of this year, by the way. Don't mention this, but just give you an indication what are the biggest and the largest investment transactions, so the market's still alive. I wouldn't say it's a totally surprising figure. I think especially the Asian effect It's the China Life. It was a big one, but there is also Life, by the way, in Russia. We all deal with these sanctions, especially the Finnish colleagues deal with these things. There were 2 big transactions going on in Moscow, which is not on our radar, most of you, because there is no investment philosophy or risk or whatever. But this market's still alive. So again, just to give you a sentiment, what are the average prices? And this is again, I would say, typical normal expectation and build. To sum up these things, what we see: continental, continental, yeah, by the way. Low interest rates in Europe, despite the increase of the Fed. It will go on, and it's not so simple as it seems. But as Mr. Draghi promised, printing money by March 2017. What you do? To find a reason during Expo Real and say, oh, look, when all these rational people here in the room, when they know that Mr. Draghi will print money by March 2017, then we try to become on the seller side by December. Because this time we want to leave the door before the flood came. And I would say, well, if there is a QE3 program maybe in place, we don't know. So again, I think the best thing is, this is where I see both sides of the table, is that keep calm, carry on, and not try to sell. Huh? Or the other way around. Who will start doing business in these days by these kind of forecasts? Again, a high amount of available capital, and again, what concerns me much more is not the market itself, is obviously that there are a lot of requests from bond managers to the real estate markets. Just the story with the lunch and all these things, but if we try to count that and collect that, this is an enormous sum of money. Of course, they want to go indirect in real estate, but we all know that when you have an indirect portfolio, you need something direct, which is brick and mortar, by the way, underlying. So again, this concerns me much more than all these cyclical movement beside and rest of Mr. Draghi. Yield compression still going on. We face around 25 basis point by end of this year for the European markets. See all this in the slides. Office retail properties still on the, let's say, wishing list and target list. I expect by end of this quarter to bigger portfolios coming to the market. I mentioned the resi one from the Australian company. There is another one in the market, and again, rising take-up volumes still in there, because the market, and this is maybe not a headline within Germany most of the time, nearly in all of the European cities, the market really are booming, coming from a low level. Case of Spain or Dublin, but this is again where in these booming times or in these fantastic times, the fundamentals, the take-up volumes, they are not parallel with the price evolution. Don't get me wrong, but it's still in a healthy corridor. Let's say this. They left the cyclical situation by statistically end of this year. End of last year. So the prices get higher than the fundamentals, but I'm still happy with that, and I don't see any main concerns. Expect the situation that, by the way, if this happened, positively speaking, in Q3, which means Friday morning, then we will see an exploding Q3, which will obviously bring some of the managers and ladies and gentlemen don't have to spend their holidays in Spain, much more living in the data room in these days, by the way. Okay, just in a nutshell, yeah. Obviously, you try to find headlines to explain what's going on, and this is my favorite. You can check out anytime you like, but you can never leave, the Eagles. And this is again where, for me, the Brexit discussion, and maybe some of you followed yesterday evening after the football match, the discussion in Wimbledon Stadium. And this was so interesting from a German perspective. What are the arguments? This was, in my understanding, it was poor. Sounds a little bit strange from a German perspective, but it's another kind of obviously talking to each other and jumping and bringing the arguments to each other on that. Most of them, it's, in my understanding, to be honest and speaking frankly and open, was nuts. Thank you very much.